what it is. We'll cut it and start it over. Thanks for sharing that. And I should have been on the chat, but
It wasn't on the chat. Brittany texted me. She's like, I can't hear you.
Oh, good. Even better. No. Even better. So, hey, whatever. Here we go. Bada bing, bada boom. It's fixed now, and we can be heard, and we will be heard. And
you want to do a quick recap?
Yeah. Why don't you? Well, yeah. Can you get us going real quick? We'll start from the beginning, and let's just do an introduction. Welcome to Wise Beyond Bitcoin. I'm Lucas.
I'm Ryan. We have some special guests.
Special guests.
Hi, I'm Martin. Jacob. We're here with Gary and Blay. Posting on Discord. We'll be on YouTube soon. Thank you for having us on.
Heck yeah, welcome you guys. Yes. And we're going to put their link in the description, and let's get going. We've got Power Hour now. We fixed our audio issues of some awesome weekly information, a lot of bullish news. But without further ado, Ryan, why don't you rock us on a little market cap update?
All right. So big news is Bitcoin's back above 40. Keeping the hope alive, I guess, right? For everything. Everything's green. The big story today, it looks like AMP token at what, 26.9%. Polkadot behind it at 14. Hex has had a review today, 9 cents, 13% today. So these are just keep looking down nomics. You see everything's pretty green. It's a great, not everything, but it's a great day. It's an up day. And one of the points Lucas was touching on that I'd like to highlight is that you just don't see these kind of returns in the normal financial sector. You can't go to a bank or a C. There's no CDs. We can get into yield farming and staking later, and interest rates that you get doing there. But there's not really an equivalent to this. Certainly there are penny stocks that you can buy, and you might get lucky and then do your research and find some kind of thing that's close. But this is an entire asset class that's exploding, and not just one pin or one needle in a haystack kind of thing. So it's unique, and it's got everybody's attention. It's got everybody. It's got your friends and family, your uncles and your grandparents, and not everybody, but it's all walks of life are involved in looking at it, and the adoptions seems to be increasing and the projects. I know we'll talk about this more, but there's just so much development happening, whether it's like bridging chains together or just creating entirely new concepts. We were getting into NFTs and how they're going to change, shopping and real estate and how people get paid for their art, and just all these different things that we didn't really think about a year ago. We weren't talking about this a year ago or a year and a half, 2 years ago. So yeah, it's exciting times. You could say this is kind of like a period similar to when the car was invented, and it took out an entire horse and buggy paradigm that had up to that point been dominant. So we're seeing that sort of thing happen here, and it's exciting.
And we still get those people. We'll never be driving that loud machine. I still have my thoroughbred, for years. Oh man,
for sure.
And now we got a Dodge Charger, just
right. Exactly.
Hopefully,
go ahead. Yeah.
Oh, go ahead, brother.
Oh no, I didn't have anything too much to add. I'm sure you had something to say. Go ahead.
I was just going to add to the market cap since our audio was out earlier, and we'll edit it so that we just start on track. But when we look at a good time to join the cryptocurrency community and see what's happening in crypto. Sure, may Bitcoin and Ethereum and a lot of the altcoins dip further and continue correcting. There's a great chance, who knows when the very bottom is, where the very top is in a certain cycle. But I would say when you look at 40,000 and versus 60,000, a 33% drop, and you look at Ethereum at 2,500 from $4,000 plus a 37% drop. This is a great time for now is a good time. Not that there won't be a better time, and it could be, but at the end of the day, I still think at Bitcoin at 60,000 is a good price, a good value, and Ethereum at 4. I look at these, like you were saying, Ryan, these are emerging asset classes, and why you see this growth in these markets. It's not. It's not tulip mania or some small fad. We're talking about a technology that is at the very beginning of revolutionizing whole industries. Polkadot is created by one of the founders of Ethereum, is looking at one of the smart contract protocols that's going to be entering the world of decentralized finance. I mean, already has exchanges built on it, PolkaSwap, and has ChainX bridged Bitcoin for decentralized finance on with smart contracts on the network. Speaking of, we've got an article to talk about Bitcoin and smart contracts on its own network. But you look at Hex, you look at Synthetics Network, you look at Engine Coin and how long that's been around, what that's done for NFTs. So many of these projects that you see solid growth in, Chainlink, Cosmos, of course, Sushi from the decentralized exchange, Sushi Swap. These are projects that are relatively solid. I would say this, regardless of whatever penny stock you're trying to find in traditional finance, I would much rather have Polkadot at $25 or Hex at over 9 cents or Synthetics at $10 and Engine Coin at $1.50 than
Polygon.
Penny stocks and traditional finance. I have no interest in so we are definitely at the beginning of a revolution and of a whole new industry. So it's exciting to see these, and the volatility is still there, but of course the growth always outpaces the correction when you see these sustainable real industries, these real emerging asset classes. A fad, a bubble comes and pops and goes away. An asset class has wild growth, comes back down, corrects, has wild growth, comes back down and corrects, has wild, and that's really what we've seen in blockchain for over a decade. So it's really silly and ignorant for anyone to look at these right now and think, oh, this is just a bubble.
It's dead.
It's like,
one's dead. It hits
or it's temporary.
under
It's bad. That it's going to be. That it's just going to blow. It's going to come and go like Beanie Babies or something.
Yeah. And if you see, most wallets are kind of like us. We're in the accumulation phase as the market crashes. That just, for most of us, or there was like a good saying I heard somewhere. It was like a bull market gets you some money, but a bear market makes you rich. That's the bear market is when you want to buy the most, is because everything's going down. It's like, if you believe in, if you really believe in the technology, it's going to go further. If it does have a future, then risking the now for a future is, I mean, like you're saying, like right now there is no asset class that does 13% in a day.
No.
Like, no. But it could do minus 30 in a day. And to be honest, when it was doing that, I was 80% of my liquidities in pools, and so I was just like, I'm not even touching it anyway. I mean, like, sure, it drops. I'm just buying more.
Exactly.
This is not financial advice or legal advice.
It's just a strategy.
Yeah.
But it for people who do their research and believe in the projects that they're buying the dip on, it's probably really the safest strategy. I mean, you're not going to trade unless you're just lucky and you're just a skilled, mathy person. You're not going to trade your way to wealth. Very likely. You might make some good trades here and there, but you'll lose money too. And it's like gambling. It's probably not going to go your way enough to be profitable. Yeah. But buying the dips and doing research and just having a fundamentalist approach to, like, a kind of a Warren Buffett approach to, like, knowing the projects and just buying for the long term on a moment where it's an opportunity, that's really what it's all about.
Yeah, Lucas is our Warren Buffett of crypto. It's like, look back in the past, Lucas. Tell me, what should I buy?
Without all the capital and assets.
Yeah. One day.
And without his wicked mane. But I would say I would look and let's speaking of what you were talking about, Martin. That's great. You mentioned that providing liquidity. Never in my wildest dreams, even after going to school in business and finance and economics, Ryan and I studied together and thought what kind of careers existed back then before crypto was around. Your choices were limited. What industry you would go into as an economist or as an accountant or in whatever industry. But now, literally, any man or woman alive can literally go to Aave or can go to Uniswap or they can go to these and they can provide liquidity, which means you can take your energy and your resources and you can take your digital asset, and while you're not using it, you can put it away and allow other people to use it in their exchanges. And in every exchange, just like the banks used to make, since there are no more intermediaries, you as the liquidity provider are helping build the bank. People don't, once people really understand what's happening, Uniswap is not just some random arbitrary creation that just allows people to just have access to infinite amounts of capital. No, it's literally built from the ground floor up of men and women around the world just literally putting their own 2 cents, $2, $50 and providing liquidity and allowing others to exchange. So this is, the future. It's the present. It actually shows the value of the technology, not just talking about it. And when we look at things like Uniswap, which now is $6.15 billion in liquidity, wow. Aave lending. So literally people can go where they couldn't have access to banks before, and who knows what's going on in their local market economy. Now it's already exists. Shucks. Let us do it. While we're here, it's a learning educational channel. You can go to Aave, which is was the first and premium lending and borrowing platforms built on the Ethereum network. It's like one of the original bad boys, open source DeFi protocols. So one could take their MetaMask wallet and they can go onto Aave and they can take stable coins, US dollars, DAI, Tether, and they can deposit it. And right now, where it's there's negative interest rates in some countries, you can actually get 2.4, 2.3, 3.2% interest rate on your stable coin. So just on a stable coin. So my point to this, let's say you're so risk averse that you're saying, I don't understand crypto. I don't want anything to do with Bitcoin or all these other protocols. I just want to keep all my money in dollars. You literally can take your thousands, hundreds of thousands, millions of dollars and take it out of traditional finance. You can put it right into something that with no intermediaries, no barriers to entry, will literally start immediately earning you right now 2.4 to 3.6 percent interest rates. APY, APR variables. So but look, there's other opportunities. We're just scratching the surface and just showing what Aave has. I mean, the reality is there's other stable coins like Binance USD that's offering 8.4% because they're trying to attract more liquidity and get more people locking up liquidity. So the opportunities in decent, and look, hey, I would say this, 0.35% on an appreciating asset like Decentralized, or to even be able to get 0.7% on basic attention token or 0.03 on Uniswap, the 7.1% on synthetics. The fact that you can get interest rates on these other appreciating digital assets is phenomenal, and it's all done through your digital wallet with no intermediaries, no barriers to entry. And anywhere in the world that you live, you are treated equally and have equal access. So as an equitable and harmonious solution to some of the shortcomings of traditional finance, this is it's a beautiful thing. I would say these are just great examples of what can be done with...
Something I want to speak on that point too.
If you could pull that back up, actually.
Oh, yeah.
Something that people may not know is you can also not just borrow and lend, but you could be earning interest on that. So if you actually scroll down on the borrow APR, look at some of the borrow APR percentages that you could get. Imagine not only having a pool of, like, let's say 10K worth of assets in US dollar value, and you lend some, you borrow some, you're adding both of those APYs. It's just another investment strategy that's available to you.
Right.
I think the coolest thing, though, is like how you're saying is like if you want to be as risk averse, or you just hate the volatility of the market, or like you're saying, some people just don't understand the technology. Here's a cool 3%.
Mm-hmm.
Here you go.
Yeah. Right. Yeah. That you won't get in traditional finance.
Yeah. Exactly. It's hard. It's kind of what I wanted to bring up about all those other articles I sent you is that, like, it seems pretty simple when we, explain it out like that, but trying to tell somebody who's not familiar with the technology or the space that, like, oh, hey, like in your bank account, you're holding your cash for like less than 1% APY per year, and they're like lowering that every year, whatever. And it's like, oh, you can get like 6-10 times that in random places in the crypto space. And they're like, oh, really? That sounds like a scam. And you're like, I mean, I guess it kind of sounds like a scam when you're coming from the other direction, but where's like Dogecoin and like all these other like SafeMoon, where they seem like they're trying to push the hype train, and like all these other coins are trying to push the technology, and people seem to be going towards the hype, not the technology. I think that's where like the first division is.
And a lot of people criticize what they don't understand. So to say it's a scam is more to say, wow, I don't understand why if that works, why other people aren't doing it. And the answer is, well, because not many people understand, which is why this opportunity exists. But it's easy to explain. There are many people in the digital world who would love to take loans right now and who would love to move dollars and move value around. But there's a lot of value still stuck out in the traditional markets. If you're willing to take some of that value and help bridge it and bring it into the digital space, you too can be rewarded, because that's really what it is. You have a lot of protocols and programs that are trying to attract that new capital, that new liquidity, and the new fiat from around the world coming in. So it's quite easy to explain and understand. It's not arbitrary, and it's not forever.
The hurdle is just to get them to understand that it's safe.
Yeah,
because they're going to say, "Is it FDIC insured? Who do I call if I can't get my money? And how does this work? And just all the basic noob questions."
I'll say it's even better. It's open source protocol.
And well, they're probably not going to get that either.
Yeah, no.
So I mean, it's like it's just taking them and getting them a little education about how these things work and why it's safe and trusted, and I think that's the big hurdle. Really, is just getting them familiar with the concept of a decentralized, secure protocol.
So
how it works.
Go ahead. I didn't mean to interrupt, Martin.
Or it's like, sorry. Go ahead. Sorry, I just lost my thought.
Oh, that's all right. I'm going to go back to what we were. I'm going to actually go back to what we were saying earlier. So before we found out that our audio issues were issues, and we'll have to edit it, and no one will ever know. But we were talking about NFTs and land, and the reason, I guess, what got that conversation going is we were looking at some of the top gainers today, and one of them is Engine Coin, which is one of my favorite protocols, considering they're one of the pioneers. I kind of a warm heart from seeing them back in the ICO craze. I love seeing those projects that came out of 2017 ICO craze that were legit and stuck around and continued to build, and they kind of founded the NFT smart contract on the ER721, I think it is, on Ethereum Solidity. So we were talking about NFTs and how in the future these non-fungible tokens can prevent counterfeit and can be used to trade or hold, license or deeds, trusts, title, basically tradable certificates that show proof of ownership that cannot be counterfeited. So instead of traditional ways where you have institutions that have to have it in this server or have it in this file cabinet and they have to double check and verify, we're moving to a system that's more efficient, and once verified and bridged, it's on the chain and doesn't need all those different back checks anymore, because whoever's holding the hot potato is holding the certificate of value. But we were talking about that could be used in the real world, right? Like you could have your actual deed to your house actually be on the blockchain that you could control and sell to someone or rent out to someone or do whatever in somewhere else in the world, just right through a smart contract.
That's what I'm really excited for, the renting and like leasing of these NFTs. So, or like, not like the technology or like the line that's going to go down, but where that's going to leave, like, I've been looking for apartments recently. So in the future, will I just be able to look up on an app or like just connect my like ERC20 wallet to an app and be like, oh, like, I'm going to look at some apartments in this area and then like I have enough, get a month? Or is it still going to be an application process, or like, actually, I guess the real question is, where's the decentralized going to meet the centralized, or like the bureaucracy part of it, where like I have to go through like a whole bunch of application processes?
Probably
for,
they already have ID solutions on the blockchain, so you literally would just be able to take
KYC.
You take one of your own identity blockchain that you've already filled out, that you use to work around, and you would literally just use that token. It would automate everything for you. So
right, you just like push it through and just like,
yeah, like they would know with your address. There's different ways it could be done. So I think, but for me, what I didn't appreciate the value of at first, and I kind of want to scooch over to this real quick. So that's what you're saying is beautiful, because that's what I like to immediately look at the real world, look at how we use titles and deeds, and look at how NFTs can be used to take place in that market. What at first I didn't appreciate was when you look at Engine Coin, or you look at things like Decentralized, which is another early NFT cryptocurrency creator protocol. And at first it's like, well, what is this? It's a virtual reality that allows people all over the world not only to Burning Man style co-create and build whatever they want within this virtual reality to add value, but to interact and to exchange anything that you can do with smart contracts within this ecosystem. So it took me a while to catch on and appreciate. But we look at now, like, what replaced the Sears catalog, right? Was it the department store, like Macy's? Right. And so you look at different ways of people, and you have Amazon taking over other shopping centers, and but in the future, it feels that how do you reach your customer or your consumer or what have you in these digital marketplaces online are virtual reality centers where people can literally not just interact, but they can exchange goods or services in kind that can be done to the blockchain. So
yeah, I think the future is going to be like an augmented reality kind of situation. Not completely.
I was just going to say that too, because I have a friend who ordered a pizza through Decentralized.
What?
It was wild to me. She's like, cool. hold up, because he's a game developer.
Dude.
And, he talks to me about sometimes how he's working on a project or something, and he told me how you could go to a specific spot in Decentraland and you could just order a pizza and it'll show up, and it's like Domino's, like it's actual Domino's pizza.
Oh, awesome!
That's so cool. So yeah, okay. Well, I'm glad to know that my intuition was on a track there. So it's really interesting. So then you go back to Engine Coin Decentraland, and people want to understand. Well, well, what's the value in these protocols? It's like, well, understand that Polkadot, Ethereum, Hex, Cardano, Uniswap, Chainlink, Polygon, these literally are the building blocks of this future system we're talking about. And will all of them be around a few months from now, a year from now, a few years from now? A lot of the tokens and projects you see won't exist 5 or 10 years from now. For sure, things are going to fall apart and more things will come up. However, many of these projects, several of these projects, will continue to build value and actually pioneer the space of what people are actually using. Because there are actually so many. You look at Aave and I was actually after this. So we talked about this. You guys are here for a reason. And Ryan, we talked about the crazy DeFi returns. So Aave is for your more risk averse, like, hey, let's just go to the banking system and stick to stable coins. So stable coins versus dollars, stable coins win, right? Like literally, if you're going to have dollars or stable coins, it's ridiculous to keep it in dollars in your banking system because I mean, how much they're going to let you pull out of your, how much they're going to let you move around? They're going to ask you permission to send a certain amount. Literally, you can take as much as you want, whenever you want, and move it from one to the next. Aave never says, excuse me, it's past 6 o'clock. Sorry, you can't move them out. Or we have to wait 2 hours. It's like, no, that's not the blockchain, right? But that
you max out your transactions. You
right?
Have 10 per day. Sorry.
Yeah. So, but then we talk about that. This is like Bluechip. Aave, I would say, is like Bluechip cryptocurrency DeFi, right? And Decentralized is like Bluechip NFT in that world. But now let's talk about some of the more high risk, but semi-solid and very, very new protocols. When you look at Iron.Finance and Adamant. And I want to bring these up because yield farming's been around for a while. And one of the problems with yield farming is the hacks, and they come and go, and they have crazy returns for short periods. However, these yield farms are, one of them is built on Polygon. Is that right? And the other one?
Iron.Finance is on both Polygon and Binance Smart Chain. I think they started on Binance Smart Chain.
And isn't Adamant, it's also deals with Quick and Polygon. I mean, Adamant is also dealing with Polygon and bridges with Titan. So, now these returns, how they're able to exist, I'm not going to have time to really explain this. Actually, I'll say this. In traditional finance, banks make money by taking interest and recompounding it. Taking interest, it's called compounding interest. And what some of these smart contract protocols are actually doing is they're taking certain interest yields that are earned on protocols, and they are automatically taking it and then putting it back in so that you earn interest on your interest. That's in short what's going.
One thing I would add is that when you see the pairs that have stable coins, those are going to have a lower return because you're going to have less risk of impermanent loss. But when you see stable coins paired up with currencies that aren't stable, that fluctuate,
like this,
that's where you're going to see these crazy APYs, but you're also taking a lot more risk for the impermanent loss.
However, when you take a risk of impermanent loss compared to traditional finance, don't worry, you're not really losing.
Right.
It's relative. It's relative. You're just not gaining as much. But no, this is interesting. Now, here's what you're saying, like 218%. That's a lower APY, but that's USDC, USDT. Those are two stable coins. Yet, look at the interest that right now, and I don't know if this lasts for a week, if this lasts for a month, or how long. Right. And of course, these rates fluctuate. They fluctuate. But so what? Now, let's say you're super risk averse and you don't want to get in all these different protocols. But you can literally take stablecoin USDC and stablecoin USDT. You can literally just take those two stablecoins and put them into a market right now that's locking them up for liquidity and giving you a 218%.
And now with Adamant, you're going to get your returns in Addy. That's their token.
Right.
And that's done. I don't have the price in front of me, but we can probably look it up. But it's done quite well. So just instead of cashing out, you can obviously cash out immediately every day.
It's worth $41. And there's a lockup period when you cash out. It's 30 days that locks it up, and then you can cash out. But it's just 1 month. 1 month goes by so fast in crypto, and these are actually what make these systems secure. They're preventing rug pulls and people removing liquidity too fast. So they do this on purpose. And it's just great to see, look, why a lot of these exist is because of yield farming issues in the past. And you continue to find protocols that are built to fix the problems of the past. So it's beautiful to see something that does auto compounding for you when you have people taking their Ethereum, taking their stable coins and locking it up on relative exchanges for liquidity, for decentralized finance to exist as more of the world comes in and is looking to get it now. These returns exist, 15, 20 years from now? No way. I doubt it. The market will be so saturated by then. However, and will they exist a year from now? Probably not here, maybe, but keep following along and
we'll check out Iron.Finance, because that one you don't have auto compounding.
Can I actually mention a quick tool that I feel like you guys will love?
Yes.
Since we're on the topic of liquidity pools and impermanent loss, have you guys heard of Daily DeFi?
No.
No? They have an impermanent loss calculator where you can put in the token price between token A and token B, and you can actually see the results of your impermanent loss. So it does all the math and all the complicated everything for you.
Very cool.
Yeah,
Love
just
it.
make your job as a liquidity provider that much easier, because you can compare two token pools and the impermanent loss that you're going to experience between those.
Right.
I can feel the real pain of my loss now. Thank you, Jacob. Real numbers.
Real numbers.
You said they have a tool? You said that they have a tool? Is that right?
Yeah. If you look up a impermanent loss calculator, it's just on Google.
Okay. But it's not dailydefi.org. Oh, wait, no, it is. I see it right here. Bada bing, bada boom. There it is. Oh, that's cool, brother. Well, thank you for sharing that. We'll put that on the list. This is a great resource. Very, very cool. Yeah, so that will show you. However, we look at like Uniswap V3 in the future of some of these exchanges, and a lot of things are working to kind of help remove impermanent loss by allowing people to put liquidity only in certain ranges of prices. That way, people can actually prevent with initial future price. They can use a calculator like this, and they can actually prevent the impermanent loss by saying, I'm only providing liquidity from this price to this price. And then bada bing, bada boom, while it's trading in that zone, they're making money. And while it's out of that zone, they're protected. So that's how Uniswap V3 works. And that's what a lot of others, I think, are going to move to. They're going to allow people more and more customization of how they
control
of their liquidity provision.
That's really awesome.
Yeah.
I would call that bounded liquidity provision.
Bounded liquidity. I would say you're right, and that's a beautiful.
It's within the range.
Yeah.
Bounds. Yeah.
So
boundaries.
Iron, a multi-chain partial collateralized stable coin, is freaking cool. A new stable coin, and it's a multi-chain partial collateralized stable coin.
So yeah, it's 25% of it is Titan, and 75% is USDC.
Well, so it's 75% backed by dollars, and it's 25% backed by something that fluctuates and could go down to almost nothing. So worst case scenario, it's backed 75 cents to every dollar.
Every dollar,
and,
right.
And best case scenario, it actually grows in value because Titan grows in value, and it actually, that 25% is worth more than 25 cents of its share. So, but
wow.
How cool is that? Ryan, remember when we were talking about, do you think that banks in a free market will have fractional reserve, or whether they'll be 1-to-1? And these are ways where the market can actually create a quasi fractional reserve and quasi 1-to-1, where you allow people to trade an asset that's 75% backed by a dollar and 25% backed by something else, or they can choose to work with something that's a 1-to-1, DAI, USDC, US Tether. So it's just literally, it's just so much fun to see all these new innovations, and I know that's just the beginning. So it's exciting, but
you're right, because it does kind of provide a nice backdrop to test some of these economic arguments and theories.
Really,
clearly, you don't need to have a government forcing you to accept something that's not fully backed. Right? That was the gold bar. The 100% reserve argument was that, well, if it wasn't for legal tender and you have to pay your taxes, and the government forcing you to have fiat currency, then we would just have, everybody would use gold coins, and it would just be 100% reserve standard. Or if they had paper money, it would just be paper money that would be backed 100% by these gold bars or coins, right, in a vault. And then, but it seems that's not true. You don't need to have. You have a free and emerging system of money that's not tied to a government mandate, and it's not fully backed. There's a spectrum of different options. So yeah, I think that it definitely answers that question.
Dig it. And so I'm on the Iron Protocol. I don't know if you watched, but I popped onto the Polygon. They also have a Binance Smart Chain, but this is just so amazing and just so cool to watch the bank and the vaults and the treasury, all the opportunities that are opening up.
The vaults just came out. And but check out Farms. Farms will show you some of the rates that you can look at. I've provided liquidity to the Iron USDC pool on SushiSwap. If you look towards the bottom.
Wow, those APYs are nice,
isn't it? Yeah, and it's paid out in Titan, and Titan just keeps going up. It goes up a few dollars every day. So.
I don't see the sushi. This is
yeah. You were on it.
I was.
Yeah, it's second from the bottom.
Yeah, where it says.
Oh, I see it now. Bada bing, okay, there it is.
Yep, that's it.
I was looking for the token. No, okay, Iron and USDC on. Wow, wow, look at those.
That's nice.
Wicked.
To give you an idea of what it does, I put in 1.5 ETH, so it was equivalent to about 3,500 at the time, and I'm making about 1.4 Titan a day. And
let's go.
Yeah.
Wow.
Which is that's about $60 a day.
And wow.
So
that's how you make your money work for you.
On how much did you start with, Ryan?
About 3,400 or 1.5 ETH.
Okay.
Or 3,500, something like that. I kept a little bit back for gas.
1.7%. You're making 1.7% per day.
Per day.
Per
and it keeps
day.
Going, and it keeps going up because I'm not selling my Titan tokens. I'm just holding on to them.
Yeah.
And every day they're worth more. So what I made the day before just keeps getting more valuable. That's highly risky. I will say that. That's highly. I'm speculating that those aren't going to drop. Right.
And even they tell you on their website that this is high risk, and although it's been audited, it's a new protocol. So all these things are high risk. But you know what? Even if you were just going to put 10%, 20%, 25% of your crypto portfolio into high risk and mess around just to learn, experiment. For me, it's all education and seeing what can be done. Look, if you're making returns like that ever in a project, take out what you put in plus a little bit, let the rest go and see what happens. And then bada bing, bada boom, no matter what, you'll live to experiment and educate yourself another day. And, but when you have returns like that, it's not like it takes long to
money back. Right.
Speaking of returns like that, have you guys checked out the Loot Swap pool?
Loop swap pool. Where would that be?
That's on the Harmony network. They have a Binance Wise Loop liquidity pool, and it's like 20,000 APY right now. It's ridiculous.
Is it tied to Viper Swap on Harmony One, or is it a different exchange?
It's a different exchange. It's actually its own exchange.
But they're both on Harmony One.
Yeah, Loot with a T though.
Loot.
Okay.
Yeah, like Loot.
I was thinking. I know. I was thinking Loop Ring.
Yeah.
Give me the loot.
Loot Swap Finance. Okay. And so this is also built on Harmony One, which is another smart contract protocol, which has done very well this year. Very, very well. And I wonder where we can see
quests. They kind of make it like a game format. So if you want to see the stats on their pools, you go to Quest to see everything.
Okay.
Yeah, like because you're completing in their quests.
Man, so it's like all these exchanges keep popping up to attract liquidity so DeFi can take place on their protocols. That's really cool, and they keep popping up. It's like, well, I don't know. There's probably a lot of examples of industries taking some of their capital and using it to market to attract new investors. But it's just fun seeing all these different protocols coming up with ways of giving back to the community for providing liquidity and doing what they do to keep the protocols functioning. Okay, we're going to start real quick before we... Now, we're going to go over, because we'll cut out the first 20 minutes and where we had no audio and get back to the grind. But you know what? We've covered so much. Let's just go through a few articles together. We pulled up some articles. I know you guys will have some stuff to talk about too. Ryan, you sent this to me, and I went through it. Bull Perks is a venture. It's a venture capitalist VC platform that help people raise money in traditional finance, but they're now moving to the decentralized finance crypto space. Basically doing what the ICO craze was doing, but doing it for traditional finance. Does that pretty much?
Yeah, that's my read. Yeah.
Which means that now, just like Martin, Jacob, have you guys seen that Ryan? Where was it you were showing me that you can actually Synthetics? What was the network? Was it Synthetics?
Yeah, it was Synthetics.
It was the Synthetics network. Okay.
Yeah.
Well,
you can buy synthetic shares of stocks.
Okay. You got.
Okay. Yeah.
Have you guys seen that? So Synthetics, and I know that other chains are doing it too, but Synthetics already has it up where you literally can get into where do you go to? Do you go to Synths or?
Yes, it's under Synths.
That's what I thought. Makes sense. Synths are the Synthetics. So check this out. Derivative token, a range of assets where you can provide liquidity, zero slippage.
You can buy. They have the inverse. I like the inverse. I mean, I don't know if I would buy it, but they have S-Link, S-Dash. That's just synthetic crypto, right? But then they have the I products it means inverse. So you can buy inverse BTC. Inverse.
Here we go.
Monero, inverse whatever.
Here we go. Inverse ETH.
And it moves. That'll move up as ETH goes down.
Inverse Bitcoin. So now check this out. What does that mean? Here, this is huge. This is huge. Yeah. Well, kind of. It's really. It's but it's like shorts. Yeah, you're shorting the market basically without having to go into traditional finance, without having to buy calls and puts, without having to buy options, without having to go that route. You literally can get your MetaMask wallet. You literally can just take your crypto and you literally can buy the inverse Bitcoin, which literally goes up in value as Bitcoin goes down. If you think ETH is going to go down, just buy iETH on Synthetics and bada bing, bada boom. You're playing the volatility, the market. This is the future DeFi. Like this is literally.
Yeah, I'll be having this up later. I'm just gonna be waiting on the updates, just sitting there.
Yeah. but they also, like Ryan was saying earlier, without the inverse, you've got synthetic dot, synthetic Aave, and they're creating ways for people to purchase
They're essentially bridging all of these ecosystems together.
Yeah.
By creating synthetic versions of that underlying asset
on their network.
On their own network, yeah.
Speaking of on their network, one of our articles goes over 0x. They've been around since 2017 and beyond, and they've been a liquidity aggregator that work in the background for stocking up, a lot of liquidity that other exchanges use and connecting their API.
You see the article about 0x launching their
one right here?
Yeah, the Polygon. Yes, that's the one.
0x API launches on Polygon for fast DEX liquidity. So they're taking all their old school Ethereum liquidity that they've been just storing up like other protocols, and they are now bridging it to Polygon to allow for faster transactions and more liquidity.
And I have to say, Polygon has some really quick and cheap transactions. I was really impressed. Less than a penny, like fractions of a penny to transact.
And they're not the only one. Polygon's not the only one that 0x is working to bridge to. They're talking about oh shucks, there it is. Solana, Avalanche. Not as familiar with Phantom, but Phantom. So this is literally just the beginning, but as we see this interoperability, we're just seeing increased functionality, and it's allowing just a bigger, wider gate for more people to come and enter and participate in DeFi. So it also allows for the price to move along with the flow of energy, whichever way it may go. But this is cool. This is really cool and exciting news. It's exciting to see these older protocols that have been around for a while continue to develop and mature and to work with these other, Polygon, Matic's been around for a while too. They just rebranded, but they've been around. Loopring's been around. Kyber Network, Balancer's been around. Bancor. So we're really looking at these foundational liquidity aggregators working with these layer 2 solutions and these DEXs.
Speaking of old school programs and protocols that are continuing to innovate, we should talk about Bitcoin.
You mean their Taproot upgrade?
Yeah.
So
exciting. They're actually building on their blockchain.
And so I remember this from a long time. I've always thought that here's one of my I go different rabbit hole, different worst case tailed end distribution scenarios. And one of them is all this DeFi and all this being built on all these smart contracts is great, but Bitcoin is the original most secure network. And at the end of the day, if Bitcoin had protocols that could do everything these others are doing, then why would anybody use another protocol? Because they could never be as decentralized and never be as secure. However, that's just not thought out all the way through. I always like to just look at the worst doom and gloom. The reality is that I could never imagine a cryptocurrency ecosystem where there's only one blockchain. That's not more secure. There's nothing more unsecure than having everything built on Bitcoin. It's actually better to have other chains that have things built on them. So
an internet of blockchains.
Exactly. And so it's good to see Bitcoin have things built on, and I would love to see that adding value to the ecosystem, but trying to take it over makes no sense. Really, it makes no sense.
Well, they've opened up the ability to do, looks like limited, very small smart contracts. I believe that's what it said.
Okay.
Oh, look, they've created, this shows they've created, you can now do Pac-Man.
No. Right, exactly. It's also going to improve privacy, so that's cool. But to your point, here it is. It allows for more lightweight and complex smart contracts. So who knows how complex they are, but if they're lightweight, I don't know.
Yep.
This might be second layer. This is talking about the Lightning Network, I'm sure.
Yep, after the next step toward Taproot activation. No, it's great strides, and it's good to see Bitcoin add functionality, but Bitcoin wasn't designed for that. Other blockchains were. But so Bitcoin will never, you can take a Ford Model T and say, I'm going to turn it into a Lamborghini or a McLaren. It's like, I'm sure there's a genius mind out there that can slap a McLaren body and throw...
it's not going to be ideal.
It's not going to be ideal, So, however, it's great to see that they're adding to the space, and that there will be other functionality, because that's great. It's great. Rootstock is what comes to mind when I think of the Taproot upgrade. It makes me think of the Rootstock on the Bitcoin network.
Yeah.
Yes.
This is actually something that I can bring back to my my SafeMoon friend, because I think it's called like the Greater Fool's Theory, that like Bitcoin is a Ponzi scheme, because like everyone's like, oh, I'm just gonna buy Bitcoin for low and sell it for higher. Ergo, a Ponzi scheme. But it's like there's so much technology behind Bitcoin that isn't behind all these other what would you call them, scam coins.
Right.
But not just the like SafeMoon, or there's like, or that that root system. I can't remember. You just called it. Bitcoin is finally something is being built into the Bitcoin blockchain, whereas all the news has been about these new blockchains. It's finally like the old blockchain, the old secure, the old granddaddy blockchain.
Finally making a change, a step forward, right? Everybody else, it's been watching and just kind of resting on its laurels while everybody else is innovating. And finally,
I think I'll do that too.
Maybe I'll upgrade. Yeah.
I too will upgrade. Yeah. I too can run small programs.
Oh, this was this article you have pulled up, this Mark Cuban article. He talks, the reason I sent that to you, he talks a little bit about Adamant and Iron.Finance in there.
I mean, look, this is huge. Mark Cuban is one of the more refreshing voices in pop culture. In fact, pop culture is riddled with so many empty voices that it feels like they're not saying much. But when he comes out, it's almost like, a true wildcat who really is in it for the knowledge and the understanding, and
right.
And he adds, usually almost all, really when he opens his mouth, he's thoughtful and adding value to the space. And the fact that he's put out this blog to explain his understanding of these projects, I think we'll definitely link this as well in the description, because the brilliance of yield farming, liquidity providing, and valuing crypto projects. I mean, I can explain the value of providing liquidity. I mean, literally, what's the value of being able to go to a bank or go to a market and trade in and out of exchanges? Well, that's huge, right? And so,
we got to make the connection. So, when there's no liquidity, there's fewer orders that are going to get filled on that exchange, because there's a scarce amount of money. Right, so it would have to circulate really fast if there's very little of it, if it's going to clear all these different orders, right? All these different exchanges. But if there's more money in the system, it's like a liquid that greases the gears, or so to speak, and you can have a lot of exchanges without there being a scarcity of money becoming like kind of stopping. Like there'd be people who would buy, but there's no one on the other, or who would sell, but there's no one on the other end who can buy, or vice versa, right? You can't match buyers and sellers, because there's just not enough money to settle all the transactions. But if you have liquidity in the market or in the exchange, then you can easily go in there, log in to connect your wallet, and you want to sell, boom, you put the sell order out, and boom, it's filled, right? And things move fast, right? But so that's really what liquidity means. It's the ability to buy and sell. And the values, just supplying it.
And because you mentioned that, I would like to, now that you mentioned that, I should have brought this up, but we saw that what's one of the projects that's doing really well today? Hex is doing phenomenal today, and that's like a smart contract bond on the Ethereum network, so to speak. of a sort. That's what I think. That's kind of how the founder Richard Hart trying to create it. And you look at its liquidity, which is not one of its strong points, but it's doing very well in what it does, and it's no intermediaries. It's set to earn an interest rate for whoever locks up. And I was going to go to Wise token because you were just talking about liquidity, and that's for me one of the most latent values as the market grows in the future, and they're building bridges. And we were talking about Iron.Finance earlier, but unfortunately I didn't post the video. And I want to give a shout out to Renee, the mathematician behind Wise Token, because Ryan, we actually hung out with him and talked to him the other day, and he was just catching us up on a lot of info that we've been wanting to put into a video as our site's been taking priority. But at the moment with Wise Token, literally on Adamant with Quick on the Polygon network LP, there are 1,000% APY, and with Ethereum in the Wise, you're getting 330% APY. So Wise continues to offer in the world of DeFi. They continue to offer on all these networks.
And that Wise ETH pair might be the sounder one. I know it's a lower APY, but you're going to have a lot less chance of
slippage.
Impermanent
loss. Yeah, that's what I meant.
Right.
I wanted to ask, this is all on the Polygon network?
Yep.
I believe so, yes.
Oh, man.
Huge. I mean,
I've got some stuff I got to do later.
Yeah, this is on the Polygon
your assets.
Polygon network, which costs almost nothing to exchange and move from. And Adamant is one of the fastest growing yield farming. This is the world of high risk. However, if you want to play around and see what can be done in DeFi, this is kind of cutting edge, and it seems to be more audited and more secure. If you look at the team behind it, there are people who care and have a history of good projects, not of bad projects.
I'll give you a little hit. I don't know if you know, if anybody's listening, this will probably be more of a hint for them than you, Jacob. But if you're trying to get into Polygon, there's faucets you can go to if you have none. Just Google Polygon faucet, and you'll find places that will give you. You can just put in your MetaMask address, and they'll send you free Polygon, and you'll have enough to where you can do 2 or 3 transactions. And that way, if you bridge your ETH to the Polygon network, you can then go and do your first purchase, and you'll have enough Matic to automatically to do the gas fees.
Wow.
I wish every blockchain had that.
If you do, I know another one that's been doing that for a while is XDAI, which is a layer 2 solution on Ethereum. They have a faucet, which is great. It means that they're basically covering your transaction costs if you pick up a few. So. But you were talking about liquidity, and before I lose my train of thought, does anybody remember on the new Uniswap how to find the Wise token liquidity? Uniswap,
yeah, that's right.
Wise token. Look.
On Uniswap V2 or V3?
I mean, it's only on V.
It's on the new one.
It is?
No.
Oh, it is? Shut.
Are you talking about where the price floor was built, or are you talking about...
No, I'm just literally talking about how to find it. So now if I go to use Uniswap, there have been so many changes. I come back to and I Uniswap go to charts. Yeah. And it automatically takes you to their V3.
And then at the top left-hand corner,
top right.
There you go. Top right-hand corner. My bad.
V2 Analytics.
Yeah.
You click on that. I don't know how I did not see that before. I feel like warning. Oh, please check back soon. That's okay. Thank you, brother. That's what I was looking to see. And here we go. Wise token number 7, $134 million in locked liquidity, not even counting paired liquidity, which would be 268 million. But that's to me that one of the many latent values. Not only is Wise being built on several ecosystems, Harmony, Binance, soon to be Casper. They're working to do things with Cardano and Polkadot. I mean, there's really just the beginning with the team. But it's a smart contract that has locked liquidity, ownerless liquidity, that is basically the people's smart contract money, so to speak, where anyone can lock it up themselves and earn interest. And now you can earn interest and trade on many various networks and layers that don't have the absurd gas fees that Ethereum just hasn't fixed yet. But I just wanted to come to this real quick because you were talking about liquidity, and I felt I haven't come to it in a while. Look, number 3.
Of
locked, and here's what's different. This is locked liquidity. Much of the liquidity on these networks aren't locked. They can get pulled tomorrow or in a minute. And the Wise ETH is literally ownerless locked liquidity. So another diamond in the rough of DeFi. Thank you, Renee, for taking the time to talk to us. We look forward to having you again on a live stream and doing more with the team and explaining what's happening as the project continues to develop and mature and just grow. But this is beautiful. I mean, one of the many out there. Now, here's what's cool about you can be sure about Wise and ETH. Okay, about these returns. Wise isn't going anywhere. ETH isn't going anywhere for a while. Okay, I mean, talk about one of the more risk averse in the world of yield farming. Wise is literally backed by Ethereum, so you don't have to worry about this huge impermanent loss. They're so highly correlated, and because of the locked ownerless liquidity and the security of the ETH network. I mean, I would basically say, like, if you were wanting to get into yield farming, this is not financial advice, just if you're wanting to get yield farming and you wanted one of the least risky protocols you could be in yield farming, I would say
more risky than stablecoins, right?
That's in a sense, yes.
Probably slightly.
Slightly. However, one could make the argument that the Ethereum network itself is more stable than stablecoins because there could be a crackdown that says fiat money or dollars on crypto are considered. So you could see in some world situation where stablecoins are more risky to be playing around with than something like called Ethereum or something else.
Well, for sure.
But
also Adamant, Adamant itself as is
as what they're paying you in Adamant. You're right. That itself
is paid natty, and you're also trusting that this protocol doesn't get hacked or the developers don't pull the rug or
which is the constant risk in these yield farming protocols. Yes. However, considering that they are audited and that there is not some major hit on that, it's great that we're seeing protocols that are just automating auto compounding for liquidity provision. They're taking interest and they're automating it, that you're putting it back and letting your interest earn interest, which is what banks and intermediaries have been doing for a long time with other people's money. It's not that these returns don't exist. These returns just don't exist to the common person.
For normal people.
Normal people don't get access. This is literally a market where normal people can come in. I mean, none of us are normal, but you know what I mean. The everyday man or woman without certain keys to access can actually enjoy the returns that only came to a few without these barriers to entry. So this is cool. Let's power through. Where am I at? I think I came back. Oh, okay. I wanted to give a shout out. You were talking about liquidity, so I had to go back to the old school Uniswap and give a shout out to Wise Token and go back to Adamant. And I was adamant about giving it justice. So we did that, and we talked about the Matic Faucet. But I do want to. You pulled up some good articles. We talked about synthetics and 0x. We're powering through it. But hey, what else? You were talking about Mark Cuban. What about this?
Okay, yes. This was a story. There's a let me pull it up. So yeah, there's some money being raised for an NFT program that's going to have connections with the NBA. There's gonna be music involved.
It's gonna have Ashton Kutcher,
right?
Which if you ever watched a TV show called
That 70s Show,
that's the one.
Yep.
Then you'll like they'll probably have NFTs from that 70s show, I would imagine, or maybe some of his other works.
We're going to release a Bitcoin themed collection in the fall.
And he does a lot of other great work, and so does Mark Cuban. And Anthony Pompliano is a great voice in crypto, and he's a great advocate and educator and ambassador. So this is so is Mark Cuban. So what an awesome little powerhouse of people. NFT Genius. We just showed an article. Obviously, Mark Cuban is he's the guys. You think he might be tech savvy? I mean, I'm not tech savvy, but I'm sure Mark Cuban has a basketball team because he's so tech savvy. He's got a basketball team saying, I'm so tech savvy and can communicate what I understand so well, I will buy a basketball team. That's how much I understand. So when he talks about stuff and he's getting into crypto and he's wrapping his mind around it and taking the time and he's picked it up fast, clearly he's going to be a pioneer. He is pioneering. So that's exciting. He's entered the NFT market. It's called NFT Genius. And I actually had I went ahead and pulled it up. And this is what the website looks like. Hello. And here's what's cool about this. And I would love to collaborate, communicate, because there are some artists that I've talked to that are working on some NFTs that are doing some beautiful things in the world. And this is literally NFT Genius is a digital production company transforming the way brands connect and interact with their customers. Utility and experiential design at its core. And so, wow, I mean, so much potential in just the beginning. But this is definitely something to keep your eye on, right?
I think so. And we have to talk about Elon Musk. Oh, go ahead. No, go ahead, Marty.
Coming from Mark Cuban, or coming from someone like Mark Cuban, who's already kind of in the entertainment industry, he has access to a lot of, I guess, star power already, or he's pretty close. He's pretty closely linked to a lot of star power already. So something that can bring, or if you go back really quick, I can't remember what it just said.
Shucks.
But bridging.
I can't.
How they,
it can't happen. I closed the tab. It won't ever happen again. I don't know how to do it anymore.
Well, either way, it's changed, or hopefully it brings a new dynamic from how creator and content creator to consumer is distributed, I guess.
Yeah.
I guess it's not going to be another streaming website. Hopefully not.
No.
What did it say?
But
yeah, I was reading. I think that is something they're aiming to do.
Oh, so I was.
Yep, your intuition was right.
Ah, okay.
And that's what's cool about how these things are being built. They're being built like Decentraland. They're being built as ways where people can interact with their fans, customers, clients, with others in general. And so this is cool. Now look at that. Now, if you ever listen to Mark Cuban talk, when he talks, it's like it's insightful, it's valuable. It's almost like every word is well crafted. It's like, oh, okay, he's speaking from experience, wisdom, from making mistakes and learning and wrap his head. Now, every time I've heard this guy talk, I mean, doesn't that look almost like a cart? Like that look says it all, and that's kind of what I get when I hear it. Very eccentric. I can see the character almost looks as it could be this like quasi genius, but when you listen to what's coming about, it's like just come on, it's just like something. Put something on that brightness in nothing. Look at that look. It's like he's wanting to respond to a tweet right now. I can just tell. That's where he's like, Mr. Elon, we've got a press conference. Hold on right now. I'm responding to a tweet.
I just love the title here. Elon Musk juices Bitcoin price yet again with his stupid tweets.
Now,
that's all. I don't even need to read the article.
Now, it's finally going the other way because when I sent you that article about SafeMoon and Dogecoin, I was trying to give like a little history of like where like Elon was making tweaks and stuff and which price hikes like which weeks happened. But like he for a hot minute he was tapped into the people's jugular vein and got them to buy a lot of Dogecoin. But I think people are starting to see through it.
Mm-hmm.
Especially after everyone thought Bitcoin or the end times were here. And now that we're at 40K Bitcoin, everyone's like,
maybe it's not the end times.
Maybe I should hold more.
Well,
Maybe that was premature.
I'll say this. BitBoy did a great video on Elon Musk the other day. And he's so insightful. I love his channel. He does a lot of crypto news, but he also has a lot of heart and a lot of knowledge behind the value of the technology and looking behind the scenes. So that's a great vid. But look, I wanted to go to this quote real quick on here where he says, this is his big announcement. When there's confirmation of reasonable 50% clean energy usage by miners with positive future trend, Tesla will resume allowing Bitcoin transaction, Musk tweeted. So this is that. What were you saying the other week, Ryan, when people feign that they
concern trolling?
Concern trolling. This is a perfect example of Musk concern trolling, and it's what he's really doing is saying, I'm justifying my actions. That's really what he's trying to do, is saying I'm justifying my flippant behavior, and this comment is to say that I'm doing it on some kind of ethical or moral reason. But when you look back at how he makes a living and the subsidies in the industry, and the amount of energy consumed. Well, look at his space program.
Whoa, too real.
Yeah.
Whoa,
without the energy credits, it's too real.
Yeah.
Well, you know what else is funny? Scroll down to the section where it says, they're talking about how he sold 10% of his holdings. It says here.
Is it?
Tesla's,
oh yeah.
He says this is inaccurate. Tesla only sold 10% of its holdings to confirm Bitcoin could be liquidated easily without moving the market. And it's like, wait a minute, you did move the market, and you said you weren't selling Bitcoin, but now you're saying you were, and all this was started because you tweeted some FUD about energy while you were selling 10% of your Bitcoin, and you were hoping that it didn't move the market. It's like, come on, like this just doesn't add up. Like, if anything, that was just that was him selling off and then tweeting, selling it at 58 or 57, tweeting his FUD, and then buying back probably that 10% at that dip. If anything, that's what he did.
And I'm gonna go out on a limb and just say, I don't believe that he actually has the mind to make all these decisions on his own. I think he's being told what to do, when to do it. I don't know who. I maybe a team, but literally, there's no way Michael Saylor, look at what he does, and all these other people. Elon Musk. If you believe that Elon Musk moves the market, that's fairy tale. I don't believe that. I believe that his tweets are well timed. I believe they're well timed to appear as if he's moving the market. And a lot of people like to play along and be like, whoa, look, Elon made a tweet. The market went down. Whoa. But to really think that the market is so thin with all the billionaires and millionaires around the world that have been soaking this up and investing it and buying it up, to really think that Elon Musk is like, oh, I'm dumping Bitcoin and then the price goes down, that is silly. That doesn't even make sense. That's beyond understanding market mechanics. So for me, that's all pop culture nonsense anyway, and it's really like a cover up for what's really going on. And I would say that if you look at who owns Elon Musk, it's traditional finance. The world of traditional finance owns his pants. They own his underpants. They own his shoes. He lives off of government subsidies and the loans that and the loans that come from these banking systems that he has to pay back. So at the end of the day, he's not a Bitcoin or crypto maximalist. He's a mouthpiece for the industries that are funding his businesses, which are a heavily subsidized alternative energy industry, and also a heavily subsidized theatrical space.
Yeah.
I mean, that's right.
One of
Space
my
industry.
oh, I'm sorry. Go ahead.
I think that was about it. But no, for me, the thing is this: how coincidentally that you have in traditional finance hedge markets dumping their crypto holdings, which is pushing the market down because of how much is being dumped at the same time. But Elon tweets at the same time, "Oh, I'm selling today," and then the market dumps, and then people, without being aware of the short squeeze that's still going on in traditional finance with the hedge funds that has clearinghouses under heat. And I mean, the war in traditional finance isn't over right now. That whole GME AMC may not be getting a lot of press, but there are some short squeezes that people are buying up, and there are some prices like GME that are still going up through the roof, that are highly overvalued than what anyone thought it was going to be months ago in the short squeeze. So it's still costing hedge funds billions. It's still coming and bleeding through the clearinghouses in the securities industry. So a lot of what we've been seeing in the marketplace as dumps have actually corrections have been coordinated dumps. Now, if you're a hedge fund that has to dump your crypto holdings, you don't dump it all at once, because then you won't get as much money. But if you dump a little bit and let the price buy back up, and then you dump a little bit more and let the price buy back up, then you're maximizing what you get for your holdings. But make no mistake, there are some coordinated sell-offs happening, and I don't think for one second that that Elon Musk and his holdings are moving the market. I think that I would say that there's a lot more going on that I know about. It just the market mechanics don't make sense to me, right? There's got to be more fuel going on than just this guy in the United States who makes these tweets. Who there's a huge portion of the world that
because if it was that simple, you could just set a bot to just follow his Twitter account.
Yeah, there you go.
The FUD bot. Every time you press it,
the Musk bot.
Yeah,
Musky bot.
For some
dirty miners.
I think one of my most irritating and most frustrating things to deal with is the troll point of cryptocurrency not being energy efficient. Well, the human race is going to continue to use more energy as we expand. I don't care what anybody says. Our energy usage is only ever going to grow. We can complain about how much energy we are using now, or we can go hand in hand and work with the energy companies. I don't understand why these energy companies aren't reaching out to decentralized nodes and saying, hey, to run your decentralized nodes, like, do it here, we'll give you like a discount. Or, oh, hey, these nodes will give you more money for proving that you have some kind of energy efficiency. And really, with the way you're getting paid out with proof of work mining, you're kind of forced to move to the most energy efficient thing anyway. Yeah, it's like it's the reason why people have these giant mining warehouses with solar farms, or why they're mining Bitcoin from the volcanic heat from a volcano in Hawaii. And I think that's just wild to me.
That is cool. They're utilizing the heat from the volcano to capture.
I heard about that.
Yeah, the thermodynamic. A long
thermodynamic
word about.
So,
that's cool.
But
geothermal. Yeah.
I also would say because that all is relevant and real, but I also would bring back the fact that when you look at what cryptocurrency is displacing, this is truly more economists and more people in markets and industries around the world really need to voice this, because this whole argument over energy efficiency is so ridiculous and overplayed when you look at how many jobs and industries are being displaced by these blockchain technologies. It's like you're having you're having whole markets and economies being stacked on blockchains that used to have whole jobs, used to have people driving their cars, burning up fossil fuels, being paid wage hours and salaries to do this job. And then they had the electricity for the computers and the servers that were keeping your information secure in their building, and then their buildings that they had to buy and lease out. It's like, if you really want to get into how much money and energy it costs to keep up this current legacy system, it's such a drain. It takes so much energy. The argument that crypto or Bitcoin is an energy drain, that's a Muskism. That's not real. That's just
it's a perfect inversion of the truth.
It's a perfect inversion of the truth. Exactly. That's why when I see the Musk tweet about, oh, when I see the energy be cleaner, then I'll look at it. It's like, oh, really? Oh, really?
I would say do that, Musk. In the meantime, we're going to be buying it up.
Exactly.
You wait.
Right.
You sit on the sidelines. You wait for that 50% clean energy.
Yeah, here's someone who's not sitting on the sidelines, and this guy's a ninja. I love every time I hear Michael Saylor, when he's interviewed or talk, he's no frills, no glitter, just right to the point, and he goes right to the heart of the matter, and usually has really, really great analogies. Always has actually funny ones, but
here he is with the bonds, another $488 million bond sale,
and he's coming in, and what does he see? An opportunity. Bitcoin right now, opportunity. And if it goes down a little bit more, I bet you he comes in and picks up a little bit more. And that's really, we never would have been talking about this in 2017. I mean, the fact Musk tweeting.
This would have happened in 2017. We would have saw $30,000 Bitcoin.
Oh yeah, within a week. And now we see, you guys. Now we see bullish news like this day after day after day, and the price is barely trickling.
Just like whatever. Yeah, Bitcoin's doing good.
One thing we got to talk about before we wrap things up. We got to talk about one of the largest smart contract protocols. We talk about Polkadot, but Cardano is also founded by a founder of the Ethereum network. His name is Charles Hoskins. Is that right? Hoskins? Yeah. Charles Hoskins. And Cardano's done very, very well this year. Smart contract platform that's been in the works for years. And this is an exciting year for Cardano enthusiasts and hodlers alike. And speaking of excitement, you found an article. Ryan, tell us a little bit about what's going on with Cardano.
Yeah, so they have Cardano's Alonzo is now able to run smart contracts. That's the big news. It's so yeah, I need to go through the article and get more details, but there's been a roadmap, and they're rolling it out. I think it says here to begin in July, this next phase, the white phase. Alonzo White will begin in July. Okay, and I guess that's when it goes live.
Baby steps. I mean, we're talking about like when a plane's being built and we see lift off a runway. You know, these are the building blocks, a stairway that's going to get to the top of the mountain. We can see a mountain. We can see there's certain plateaus and cliffs, and we got to build little bridges and build little stairways to get to the next level. But this is a huge milestone for Cardano network to actually have smart contracts on their network live and happening.
Yeah, I heard a lot of people talking smack about Cardano earlier because there's nothing being built on it. There was no what's being developed. Where's the development? Here we are.
It's taking so long. You're right.
Yeah.
Well, but see, good things come in time, right? You don't create overnight. You know, the next paradigm shattering technology. You have to tinker. It takes time.
I really like to think about airplanes and automobiles, and I listened to another developer, which I'm not. I have no background in computer development in that technical language, but I like to listen to those who do and follow. And you know, many people who are developers, they're looking at Cardano, Polkadot, Ethereum, and Harmony, and they're looking at these smart contract platforms as kind of building the ecosystem over the next several years. They're not saying, oh, which one's going to win next month or next year. They're literally talking about these being the ones that hold the market share for the whole crypto ecosystem over the next several years. They're interoperable. They're building together. It's not this or that. It's multiple lanes.
Right.
And maybe there's an HOV lane on the highway. Maybe there's the fast lane, the medium lane, the slow lane. But this is really,
You need all of them.
when you look at Cardano and you look at this development, it's just proof in the pudding that it's able to do what it set out to do from the beginning. That's how you look at it. And you know, it would be nice to be a part of an ecosystem before it's running 100%. That's where you get a little bit riskier in all these protocols, but it's also where the value's made. When you come in and you join the community and you give them support. You know, I look at being a part of crypto not as a financial investment, because none of these markets have been tested. None of these markets come from traditional finance. They don't have the traditional oversight. And most people in the world of traditional finance and oversight committees have no idea how this technology works because it's brand new. I look at the people who are part of this as being pioneers who are taking risks in educating themselves and others. I think of all this as being tools for education. It's all tools for communicating and educating. And a lot of us make a lot of mistakes that we don't have anyone to come bail us out and to help us out. And that's okay. That's okay. I've paid my lumps. I'm sure I'm not done, but there's still...
That's life. That's
life.
not just crypto. That's everything.
But
right?
there's nothing more exciting, I would say, as far as technology, community, like Jacob, Mark, thank you guys for being with us again. We look forward to doing more power hours with you guys as we do more streams and interactive with your site and what you guys do. We'll definitely be building interoperable bridges with the work you guys are doing as crypto ambassadors. But look, that's what this is about. This is bringing people together spiritually and intellectually and emotionally on recognizing the potential that we have with this technology. And it's bringing people together on that, which is beautiful. I mean, that's really what this is about. It's building communities, interoperable communities around the world that are using this technology to change the world. You know, for me, that's what it's always been about. I know for Ryan, that's kind of why we always were interested in blockchain technology and even cryptocurrency as a money. Our economics nerdy mindset background, we're thinking of the creative destruction and how evolutionary this would be for capital structures with a new medium of exchange that isn't centrally controlled, supply and interest rates.
Now that what changes that?
That's an interesting conversation to have.
Yeah,
especially with like South America or some places that are getting into like messy jurisdictions. Or I mean, you can even look at is it northeastern Africa is where like most of the Chinese ports are at, and or how much influence that Bitcoin or like decentralized currency is going to have against something as central as either the United States or
it's the transfer of the power, because those centers of power are a function of their financial power, and their financial power is predicated on their control of the money system and the debts and the bonds and the interest rates and flows of currency and all that, and taxes. Right. So, but if you take that and you democratize it and you open it up and you just make it global and free and available, you know, to people to build on top of, layers to build on top of, and make it not a gate-kept, you know, honeypot for the elite, then it transforms. It will definitely liberates people, and at the same time reduces the power of these big centralized bureaucracies that don't have our interest in heart, and also seem to have a lot of responsibility for dropping bombs and building prisons and doing a lot of nasty shit. So yeah, I think all in all, I'm more excited, like Lucas, and I'm sure you guys, in the evolutionary social dimensions of cryptocurrency, just as much.
And where my money's going to be going, you know.
Yeah.
Where my money's actually funding.
Right. Understanding your investments is what it is.
Yeah.
Voting.
Exactly.
It's like people say voting with their wealth and voting with their feet. And I think I can see blockchain technology as a way of allowing people to create jurisdictions and vote to really help create a better world that we all kind of wish to see and recognize it already exists, and
But it's not on the menu, right? Politically.
seems to not be on the menu politically. It's like imagine going to a restaurant where everything that you looked in the menu had like poop in the sandwich or
But you could imagine that cheeseburger without shit on it.
you
Right?
could,
Like,
you know,
this could be better.
you can imagine that salad, you can imagine that drink, you can imagine that soup, you can imagine all that stuff. But for some reason, this restaurant you go to always has feces in everything you order. It's like a different, whether it's a rabbit dropping, it's a bird dropping, there's always a it's like, and that's like politics. Like every time you listen to it.
It's artfully incorporated, right?
Yeah.
It is. It is. Sometimes it looks like a garnish.
Yeah.
Yeah.
And
But
the only
it's there,
time
but
you
it's
can't
there.
get poop
But
in
it's there.
in your thing is if you use 50% clean renewable energy. It has to be like pure gas when you burn it.
Yeah.
Wow.
Yeah. Oh
That could
yeah.
Yeah. Sustainability, right?
I got one more article and we'll wrap it up, you guys. Because I'm pretty sure that when we cut the first audio out, we're right about on an hour anyway. But this is just a little positive news to end the day. A lot of people have noticed that the volatility has not been as high as in the past. Low volatility Bitcoin suggests massive upside ahead. This is someone saying that just because you don't have huge volatility, that doesn't mean that you've hit a top. A lot of people are saying, "Oh, look, the volatility's kind of tapered off, so that must mean we're on our way down." And this is just a great article saying that just because you don't have volatility, that doesn't mean you have a top. In fact, Bitcoin is the biggest macro event of all time. And then, of course, we go back to that other article. If you were to take this highlight, and I bet you could find this guy somewhere saying something like that. I mean, I'm sure somewhere Michael Saylor has said something to the effect of that point, that Bitcoin. And that's how I feel about Bitcoin and cryptocurrency in general, that when we look at this effect on the markets, the economy, this is a once in a hundreds of years, multi-generations. I mean, we're really talking about a technology that is not only making way for traditional means in their local jurisdictions, but we're talking about a worldwide network taking over economies for people all over the world to come together, and in finance and in supply chain and in video streaming and in identity and NFTs, and go down the list, So this is a big deal. This is kind of exciting times for sure. Thank you so much, everyone, for joining us for our Power Hour. We're going to be here every Monday night from 6 to 7. By the next live stream, Ryan and I will actually have our website back up, wisebeyondbitcoin.com, and it's going to be a hub to help direct you to, the premium resources that we crypto lovers love. You like to go check out Nomics, Market Cap. You like to go check out DeFi Pulse. You like to go check out, hey, you want to learn more about the cryptocurrencies that you're interested in? Well, click on them and go right to their webpage, because we're really making it to be an educational resource that's free for everyone to use. So get ready to put it on your tab and go to the links and give them a little jab.
Check it out.
And then afterwards, turn off your camera and take a little dab. That's a little joke for the Colorado, California people out there. It's been a beautiful, beautiful day. It's a beautiful time. And thank you for your beautiful time. I'm going to say until the next time, namaste and have a beautiful day. And I'll let you guys say your piece as we make our exodus.
Well, thanks for watching, tuning in. We'll be, like Lucas said, every Monday, 6 to 7. And thank you, Jacob and Marty, for joining. That was awesome.
Oh, yeah.
Thank you so much. It was awesome being here. I really enjoyed the conversations. A lot to learn, a lot to look up. a lot of white papers to read, to be honest.
One last thing I just want to say to everybody at home. Time is the only currency that you can only ever spend, so don't waste it.
And
That's a good point.
until then, adios, and we'll see y'all next time. Perfect, you guys.